Welcome to Notepad. I'm your host, Ibrahim Sani. If you are the type of investor that is still looking for bargain hunting, I suppose you can actually take a look into the equities asset class. Joining me very shortly is Alex Chai from RHB Investment. And the reason I got him on board is because I want to talk about RHB Investment's latest book, which is called the RHB Top 20. It talks about the top 20 interesting stocks within the small and mid-cap sector that investors might want to look at, particularly in a volatile environment or in a problematic climate such as right now. They have defined these companies as those having a market cap below 20 billion ringgit. And as mentioned, they have had 15 editions before this, and it has brought about mixed results in terms of their performance. But of course, investing in small cap and mid cap stocks is a little bit different when it comes to, say, for instance, the FBM KLCI or the FBM 70. If you are prudent and if you are diligent in terms of tracking the kind of movements of these kind of companies, you can actually walk away the winner. But if you are uncertain about your risks and challenges that lie ahead, you might be worse off. So be careful in terms of trying to enter this particular space. But if you want to learn more about this, and interestingly enough, this episode is indeed one that is for you. So joining us right now is Alex Chai. He is the Regional Equities Research Head of RHB Investment. Alex, thanks again for speaking with us, taking the time to speak with us actually. Let's take a look into the business of RHB Investment when it comes to publishing these kind of reports. Let's start off with the first question. Why publish the top 20 book? In fact, why publish it 16 times as you have done so today?
If you look back in history, the precursor company, which is OSK Investment Bank, which we acquired, was the first broker really to look more closely into small caps in particular. And today, we've developed a fairly strong following of investors who actually look forward to this annual book launch of small cap companies, which we define as companies that have a market cap of less than 2 billion ringgit. So, in the small cap space has been an interesting one over the years. And today, there's a lot more focus on small cap stocks than we've ever had before. So it's always a challenging exercise to drill down into the lesser known companies and to go where few investors have tread before to try and find out undiscovered jewels, and that's what we have done over the course of the last 16 years.
The interesting bit about this is that some of the companies are within your coverage, some are not. The top 20 that we're talking about later very shortly, are they all part of your coverage?
Okay, this year's names, all 20 are new stocks for RHB in the sense that none of them are under existing coverage. For some of the other the books from the other regional countries like Thailand and Malaysia, about two-thirds of them are new names. But for the Malaysia book, all 20 are not under existing coverage.
Yeah, it's also quite interesting that you brought in the regional aspect. You are, of course, the regional equities research head. Let's talk about some of the markets right now that you have in the book. Other than Malaysia, what do you have there?
Yeah, so we've got three other books covering Singapore, Thailand, and Indonesia, all done by our research analysts countries.
All right. Just to clarify, so the ones that are in Malaysia, they're brand new. You haven't covered them before, but you're going to cover them right now, moving ahead, or how? Okay.
It doesn't mean that we've highlighted it in this book, which is sort of like a first step towards. We know we're shining a spotlight on those things. It doesn't necessarily mean that we'll necessarily cover those stocks on a regular basis. Because of resource allocation and so on, it's the focus on interesting new names, which sometimes the interest may be fleeting. Sometimes these companies may grow into mid caps and even large caps. one of our earlier discoveries was a company called Press Metal. Back when it was a sub 1 billion ringgit company. Today it's a 20 billion ringgit stock, part of the PM KLCI.
Yeah, of course. Press Metal is indeed an interesting story to cover, particularly when you guys were talking about it in your top 20 books some years back. Let's take a look into the 15th edition, the one that you guys published in May 2019, last year. This time, last year. If I can just refer to some performance, the value weighted return is actually 20% positive, 20%. Equal weighted return is actually negative 3%, and when you benchmark against the other benchmarks like FBMCI, it's actually below or negative 14%. FBM70 is minus 70%. It's actually quite an interesting mixed bag there. So if we follow actually quite diligently and religiously the top 20 15th edition, we actually would be better off, I suppose.
Yes, I think clearly it really depends on when you are measuring the gains. Whether you're taking it at the peak performance of the share price over the course of the last 12 months, or whether you are taking it from one particular point in time. Clearly, we've seen significant market dislocation over the course of the last 3 months from the COVID-19 pandemic, oil price collapse, and obviously the political difficulties that Malaysia is going through, which has all contributed to significant volatility on the market. But clearly, on an equal weighted basis, the names that we picked in the book last year generally haven't done too badly.
I want to talk about the screening process that you guys have put through. It says so there that the screening process is rigorous, there's qualitative, there's quantitative. Talk through us into how you guys narrowed down the thousands or hundreds of companies out there into this 20 that is in this book.
Essentially, the process starts off by doing some high-level screening of the financial metrics, particularly mainly from Bloomberg, and then zeroing in on some of the more interesting sectors that we think have the potential to offer structural gains. Technology for one, right? So you will see that in this year's book, the technology sector features quite strongly, together with the industrial sector that we think will also be a beneficiary of a cyclical upturn that we think will begin to take hold as we enter the end 2020 and going into 2021. We think that the tech and industrial sectors look a good bet for the next 12 months going forward. So other than high-level screening, the companies that we've shortlisted, the analysts typically go and visit management to understand the business model and the key growth drivers that each company offer. We then come back and we build a financial model for each of the companies, and we then look at the metrics to justify whether or not in terms of their valuations. Of course, we also look at corporate governance, which we take very seriously, to ensure that none of the companies selected have CG-related concerns.
Yeah, I noticed that you didn't mention about the type of industry that you want to put in the mix, mostly on qualitative, quantitative, Bloomberg, interviews with the management, but it seems like this industry classification is also quite interesting because it's actually quite diverse. We've got construction 5%, 15%, consumer 5%. You were mentioning, you were alluding to technology being a quarter of it. Yes, industrial products 20%. How do you come about having a good mix of all these industries into the picture?
Yes, I think end of the day, even if you like one or two sectors more than the others, I think it's going to be difficult trying to put a book together that focuses on one or two sectors. So it's got to be all things to many people, and I think we want to offer a range of companies, across a variety of different industry classifications.
Okay, Alex, we'll take a short break. When we come back, we'll discuss about the whole ideology of investing in small and mid-cap companies. Don't go anywhere.